Warren Buffett believes that either you get it and you're a value investor or you don't. I don't necessarily agree with that. My transition into value investing was not a boom immediate. I used to be a hypester. I used to believe a company has a lot of growth potential in a growing industry, therefore you buy the stock. Now I realize that that meant I pay any price for the stock. But there were things in the past that I look back on that now make me realize, wait a second, there was a value investor in me. I just didn't realize it yet. But hanging around the right people pulled that out of me. So here are some of the traits that you should have when you realize maybe I'm a value investor. Very first one, and this is probably the hardest one. When you buy a stock, are you buying a piece of a business? If you believe that you're buying a ticker that's going to go up and down based on people's demand and people's excitement for an investment, that is not investing. That is definitely not value investing. If you realize that you're buying a cash flowing business and you're buying a stream of cash flow in the future that will be generated by that business, you may be a value investor. So what does that mean exactly? Well, guys, everybody talks about the growth potential of companies. But at the end of the day, you have to look at the growth and the reliability of their earnings and cash flow. And if you're able to pay a reasonable price for that, knowing that this is a business that's going to grow over time. If I ask people, do you think Microsoft will be a bigger company 20 years from now than today? They say, well, of course I do. Great. So if you pay a reasonable price today, and you believe that in the long run, as Microsoft's earnings double, do you think the company will be worth double? Well, yeah, of course. That's exactly the idea. The hard part in investing, the hard part in buying a stock is we see these major price fluctuations. You can see Microsoft go 350 to 200 in a matter of a year. And when we see that, when we see Mr. Market acting irrationally, we get fearful. But if you believe that you're buying a stream of income and you're buying a piece of a business that you want to buy more of as the price goes lower because you think the long term is better, you may be a value investor.
The next one is patience and discipline. You don't act on your first instinct, no matter how tempting. Instead, what you do is stick to your process, a process that is tried and true and that works for you. And this is where discipline comes in. You stick to your process no matter what. In daily life, that can mean going to the gym every day, especially when you're not feeling it. Or something like I do, practicing 5 minutes of Spanish every day. It doesn't seem like a lot, but sticking to that disciplined process is what helps you become a really good investor. And not only that, become really good at what you do in your life. Let's take Tesla, for example. It's a great company, but it's not a great price right now. That's where the patience comes in. Waiting to know that you can invest in a really great company, but you just have to wait. Stay disciplined to your process. And when that price comes into your target range, that's when you pounce on it. That's what is going to make you a really good investor. Patience and discipline.
Another attribute might be that, and this is going to be very generic, but are you rational in your decision making? Can you sit there and when Mr. Market is telling you that we're going to pay you a lot less for the stock, you can take that and still be rational saying, wait a second, I am buying a company that still has all the attributes it had before, but now the price is cheaper. I want to buy more. That is probably the hardest part of everything, being able to take the noise out of the markets. Because when things go bad in the stock, all the news will point to the reason why that stock is down. It won't talk about the positives, it'll talk about the negatives. And when the stock is overpriced, it's going to be all the great stories. Can you stay rational and say, I'm still buying a piece of a business and I'm still buying cash flow stream? I'm now, if the stock is down, able to buy it cheaper and my thesis is still the same. Or the stock is up a ton, my thesis is still the same, but other people value it more than I do. I'm not going to add my position. That's the hardest part. Staying that rational thinker, not following the hype. I look at crypto. I look at NFTs. We don't even hear about NFTs anymore. Crypto's the next one to fall. When I see the type of people that are making decisions on crypto, it makes me chuckle. That's all I need to know that's a bubble. That's it. Why? Because it's everybody who's trying to chase some idea. And of course, they will sit there and justify it anyways. Blockchain's incredible. Guys, the internet was the biggest thing that happened in this world in the last 50 years probably. And guess what? 99% of internet businesses went to zero. Just because an idea is good doesn't mean everything in that idea will be great, but it's hard to stay rational when the hype train is around you. And it's also hard to stay rational when the depression hits, when the pendulum swings from euphoria to the other side, despondency, whatever you want to call it. That's the hardest part. Staying rational when the emotions are high on either side is extremely difficult. But if you're able to do that, you are definitely well on your way to being a value investor.
You're a long-term oriented person, not only with investing, but with your goals, your dedications, and your overall everything in life. You know it's important to live in the moment, but not just that. You can't live in the moment. You need to understand compounding. The consequences of your everyday actions can definitely affect you. Maybe it means don't take that 6th shot at the bar because you're going to ruin the next day. For me, it starts in here. I want to become a better golfer. So what do? I practice every single day. I get this much better every single day, but over a long period of time, it's going to put me this much better. A true value investor understands how important it is to start early, how compounding works. The earlier you start, the better you're going to be. The more effort you put in the beginning, the better you're going to be. Even if those results don't happen immediately, you know that many, many years down the road, you are going to become better. You're going to move from that 18 handicap to that 5 handicap. So we're not chasing the hype investments. We are chasing the slow, boring stuff that compounds over a very long period of time and eventually will be in a really good place. I like that.
Another key attribute for value investing is margin of safety. Seth Klarman wrote a great book called Margin of Safety. Ben Graham talked about it. At the end of the day, guys, we don't know the future. The future is unknown. The further you go out, how many things are going to happen? Look at the last 25 years. If you're young and you're about 25 or 30, go look at what's happened in your life since you were born. All the good things, all the bad things. We don't know what's going to happen. That's why margin of safety is so important. Warren Buffett has a great quote. If you want a 10,000 pound truck to go over a bridge, you build that bridge to support a 20,000 pound truck. Why? Margin of safety. You don't build it to do exactly 10,000 pounds because let's say the driver one day is a little bit more obese than you want. That bridge is coming down, right? You have to build it with that margin of safety. And the same applies to all investments. You could be wrong. Worlds change, things change, you could be wrong. So if you're able to buy with a margin of safety and purchase your investment at a price below that margin of safety level, you are probably a value investor. And if this makes sense to you, you're a value investor. And it's absolutely necessary for successful long-term investing. Margin of safety is all about providing some wiggle room for yourself in case your assumptions don't turn out to be true. And that could happen. We're still humans. We still make mistakes.
You think independently and you go against the grain. Just as you are disciplined to go to the gym or practice your golf game, you go against a lot of what your friends do. Going out to the bar late at night when you have work tomorrow or school the next day. Going against investments like crypto, jumping into stocks like Peloton and Stitch Fix that are down 90+%. When everyone's saying that Tesla is the thing that cannot die, when everyone's jumping into FTX because Tom Brady is saying this is a great investment, you don't do it because you don't understand the logic of it. Thinking independently, it's all about blocking out the noise and thinking for yourself, not going with what your friends say, with what the media says, or what the noise of the day tells you to do. It can be very tough, and value investing is a very, very lonely road, but it can be done, and you will be better off for it.
When you look at investments, another attribute to being a value investor is, do you want to understand how you come up with intrinsic value? That is the key to all investing. Coming up with a value for an investment. Not looking at the stock price and just saying, oh, because it was 100 before, now it's 50, it makes it a good deal. No, it might make it a better deal, but doesn't necessarily make it a good deal. If you have the desire to understand why something is valued at a certain level, you might be a value investor. I remember in high school, I would always ask the head of our investment club in high school, how do they come up with these analyst estimates for pricing? Well, all these people, blah, blah, blah. But I was always asking, how do they do it? Why do they do that? What's the reason? I look back on that now and say, Paul was a value investor. I just didn't have the tools around me to make that possible. But I always wanted to understand why something was worth something. That's it. And I knew that if I could figure that out, I would do very well. Once I made that realization, I knew I was going to be able to do very well in investing, because at the end of the day, price is what you pay, but value is what you get. The example I always give, if I put my house in the market tomorrow, let's say my house is worth $1 million. I put it in the market tomorrow for 10 million bucks. The value investor would say, that's a ripoff. Regular investor might say, let me see if I can get a deal. If I decrease the price to 5 million, the person who doesn't understand value investing and doesn't understand intrinsic value will think that's half off. That's a great deal. The value investor will say, that's still $1 million. I'm not paying 5 million for $1 million. Price is what you pay, value is what you get. But to somebody who doesn't understand value, 5 million versus 10 million looks like a screaming deal, when in actuality, it's still a terrible deal. A value investor wants to find a good price for something. They just want to be able to figure out their intrinsic value and try to buy with that margin of safety that we talked about before. That is the key to successful value investing. That's the key to all good investing. Doesn't matter. Warren Buffett and Charlie Munger say value investing is redundant. You cannot do real investing without being a value-oriented person. That is the big key.
You are research-driven. You talk the talk and walk the walk. Rather than blindly buying stocks or doing a quick Google search or a YouTube search of seeing what somebody else says or talking to your creepy uncle on Christmas because he says go and buy X stock, you actually do the research for yourself and understand what you're researching. This includes looking at balance sheets, income statements, cash flow statements, different 10K reports, and looking at bearish cases and bullish cases on the stock that you're looking at buying and understanding, are those cases actually warranted or are they totally pipe dreams? Tools like Stock Analyzer on everythingmoney.com, those are things that you can plug in your own numbers, make reasonable assumptions, and decide what prices you're going to pay for your stock going into the future. In fact, deciding what price you're going to pay is one of the most critical pieces of investing.
So if you're watching this video and you're like, wait a second, I have several of these attributes, you may be a value investor, but I want to warn you, before you get on the value investing train, it's always difficult. Why? Because when stocks are flying high and you're not buying them, you look stupid. When stocks are falling and the news is terrible and people are avoiding stocks, you look stupid because you're buying them. You always have to go against the grain, as we talked about before in this video. You have to be an independent thinker. It is a lonely road, but that's why our community is so valuable, because it's a lot of similar, like-minded people out there who love when stocks are down. They love when they see big discounts. I was just on a call with one of our community members and I was talking to him and I said, man, imagine Microsoft at 120. And he laughed. He goes, God, that'd be incredible. That's what we do. We get excited when stocks fall. We get excited when the investments we want to make become cheaper. And that takes some time. But if you have that mentality, you're definitely above everybody else. Because remember, everybody in this world says they want to buy something cheaper. But the hard part always is to look at something go lower in price. And the news justifies that and says, well, the difference is this stock sucks because of blah, blah, blah. And you realize it's all baloney. It's all just news. That is the hard part. So what should you do now? Fortunately, we've made thousands of videos about real estate, stocks, businesses, value mindset. All of these things are what you need in order to be successful. It doesn't matter if it's real estate, doesn't mean if it's business, doesn't matter if it's stocks. It's all about a certain mentality of what you have going into it. So all I'm asking you to do, subscribe to this channel and share this video with somebody else who could get a lot of value from this so they can subscribe as well. Thank you very much for your time.